just participate in this quick poll on, if you can participate in this quick Menti poll, just to give us a sense of who we have in the room. So the first question there is, how long have you been investing for? So Menti is a, if you've not used a tool before, it's an anonymous tool, so we won't get to know who it is. But good to see the numbers starting to trickle in.
Ayanda, can we pop the Menti link in the chat just for ease? Because a few people might be also on their phones. And thanks, Stephen. Thank you.
Okay. Thanks, Alex. And so as the poll sort of comes in, and I mentioned some of these points, that the Africa Angel Academy is precisely there to support you on your angel investing journey, whether you're a first-time angel investor, whether you've been investing for a bit of time, but you just want to sort of refresh through the material, and you want to just see what other angel investors tend to do. And the program is such that you get to do a lot of networking with other experienced angel investors, especially when we have the different master classes where we invite experienced angel investors to come in and share their thoughts and so forth. Of course, you get to network with other program participants. And in the course of the whole program, you also get the opportunity to attend the different Angel Connect sessions we have, which discuss different topics. And also we have quite a number of angels who attend those different sessions. And so the numbers are in. So a number of us have not yet started investing, and a few of us have invested for 5 years plus in this case. Thank you for participating in the poll. I think the numbers are still coming in. Once we get to 30, I think we can move to the next question. We're just on 25, and we are 39 on the call. Let's see whether we can push this to 30. I guess not. Let's see maybe for the next question. And we can move to the next question. Thank you. So how many angel deals have you done so far? Okay. A number of us are just getting started. And I'm going to say no points for guessing who's going to put in that they're seasoned investor, 10 to 15 years. Okay, we're just about to get the 25 mark, but a number of us are just getting started. And hence, I guess some of the points we're going to discuss are going to be useful for you, just in terms of just very direct points for you to think about as someone who wants to get into angel investing as a contact spot. Okay, thank you for participating in that. And then let's move to the last poll question. Okay, this is for those who indicated they've made some angel deals so far. And I wanted just to get a sense of, what their most important lessons have been in the journey. So just a sentence, and we'll try to contextualize that, because I'm sure a number of these are probably going to feature when we get started with the key points. Not applicable. Okay, learning by doing, that's a good one. Yeah, we like saying that angel investing is a contact spot, which means that you get much more learning once you start making the investments, as opposed to when you're sort of just evaluating and you've not yet started. That's a good point there. So team matters more than product or service. Yes, that's most experienced angels will tell you that you back the team. You go with a team even if there's a B product, then sticking with a product when you have a B team. And that's just really to say that the team, if you have a really good team, they're able to pivot, they're able to figure out the market, and they'll weather whatever storms come their way. Alex, anything you find interesting?
Nope, I think our work is done. We've got more than 10 lessons.
Yeah,
but also good to see that our thinking is also aligned to our experience in the room.
Yeah. Yeah, I like this point of startups need a lot of hand holding, and then there's also underestimating how much support and time the startups need. And actually, that's one of the points we're going to be talking about in a sec. Due diligence, of course, that's important. Yeah, dare to start investing and learn from the fails, from the falls, yes. That's a good one also. Okay, I think those are some good points. I think we can now jump on to the top 10 items. Ask questions, there's no stupid question. I like that. Of course, a problem founder fit. I like that. The founders need to have a fit with the problem. They need to find the right kind of founders who understand the problem really well. They have the experience to be able to solve that. They have a team that's able to sort of like address that problem. Yeah, that's a good point. Alex, any that you want to comment about before we move to the top 10?
Nope, I resonate with a lot of these.
Okay, cool. Thank you very much. I think we can then get started. And I'll just share my slides. I wanted to bring those in one by one. So let me just share my slides quickly. Okay, so the 10 things, and I guess there's probably more than this, but the 10 things that angel investors get wrong. And Alex, as we discussed how we'll do this, I'll go with the first and probably invite you for the second, and we can just keep adding on different points here. And just for introduction's sake, my name is Stephen Gugu. I'm one of the facilitators at the Africa Angel Academy. I'm also an angel investor. I'm part of the Victoria Business Angels Network. And I've been making angel deals for the last now, I think 8 years. So I've maybe not as long as some of the angels we responded, but I have a couple of ideas about how the journey goes. So thank you so much for joining us today. So let me start with the first one. And the first one for me is not thinking about your angel investing strategy well in advance. And I mean, these points are not in any order, but the reason why I put this out, and maybe we should start by asking what's an angel investing strategy, but it's just a broad guidance of what exactly you as an angel investor wants to be investing in. So for instance, you could be talking about things like, at what stage do you want to invest in? Do you want to invest at the pre-seed, at the idea stage, at the Series A stage? You could be talking about what sectors you want to be looking at. Do you want to just be very sector specific? Some angels were very clear they want to invest in fintech because maybe that's where the experience comes in, or some angels are very agnostic, so they're looking at everything. There's angels who are clear they want to invest only in tech, and there's some that also want to invest in sort of like SME type kind of deals also. Those are different aspects of your strategy. They're thinking about how much cash do you want to invest, for instance, in a year. So that you get a sense of how many deals you want to do every single year. So all those things go into your strategy. And I think why I picked this as the first point here is the fact that when you don't have those ideas clear in your mind, then they tend to show when you start evaluating startups. And they show in the following way. Startups will send you decks, and you'll have to really agonize to figure out, okay, is this a deal I'm going to invest in? Is this a deal I'm not going to invest in? You'll be invited into deals, and it takes you very long to make up your mind in terms of whether it's a deal you want to participate in or not. And one thing you realize once you start your angel investing journey is that time is of the essence for you as an angel investor and also for the startups. Let me start with the startups. For the startups, because when a startup is reaching out to you for funding, of course, they're also talking to other funders. If it's going to be a no, I'm always of the view, just say no as fast as you're able to so that they can move on to the next angel or to the next VC investor. And the reason for that is you save them time to be able to figure out who's going to get them funding, because funding is very important for them. It's runway at the end of the day. So you want to save as much time. And also it affects your credibility as an angel investor, how you treat the different startups. And for you as an angel investor, you realize a number of deals that come to you also have a time limit. And if you take too much time in terms of being able to make up your mind, the deals then move to the next investor who's ready and willing to make the investment. So you want to make sure that you're clear in terms of some of those ideas, and then you're able to really move as fast as you can once you see the deal that you want to invest in and so forth. Alex, do you want to add anything?
No, I just want to, back in my VC days, I came across quite and I mean, this was many, many years ago, but they talked about kind of the skill to kill. And also when you are evaluating deals, you want to give the headspace and the concentration to the deals that really do fit into your mandate and into your investment strategy. And that ability to say no and filter as fast as possible. Look, you're gonna miss out on some gems. I mean, that's inevitable. But it also just helps you be a lot more focused and really be able to spend the time, as you say, Stephen, doing the due diligence and investigating those which really do fit your mandate. And also, again, not kind of messing startups around and being able to say no so much faster. And I also stick to my investment strategy, and it's kind of got even more refined as I've grown. And I think that's also okay to also think about your investment strategy from, as often as you like, and think about what works and what doesn't work.
Thanks, Alex, for that. Let's move on to the second. And the second is investing in the first deal that comes your way. Alex?
Yeah, I sometimes think people are so keen to do a deal that they'll do the first deal. And in some ways, I think it's sometimes, I think they're lessons to, I think if you're investing in the first deal that and you think it's going to be a winner, then that's a problem. But I think the more startups you look at, the more decks you look at, the more patterns you see. The more you know about different industries, questions to ask, things like that. So just even that process of looking at deals constantly and evaluating them is almost like a muscle you need to practice. Sometimes I think you can learn a lot from just doing that first deal, as you say, but also, yeah, Serena, I really like this. Plan on throwing away the first $1,000. Every education costs money. It's high risk. Absolutely. But I also see angels that invest in the first deal and they almost strangle the deal. And what I mean by that is they don't quite know what they're doing, so they try and do the deal takes such a long time and is so fancy, and especially if people come from kind of more VC or private equity, they want to do due diligence forever, and they, it's an early stage business, and they kind of get so wrapped up in the process and that they actually don't make the deal, and it almost kind of strangles it in a way, and I don't think it's very useful for the entrepreneur, if that makes sense.
Yeah, and Alex, just to add to what you just mentioned, I think for me, I'll take a different angle to this, and the angle is if you've not yet started investing, nothing stops you from already just attending, pitch days for different accelerators, incubators, if there's an angel network, joining the angel network and sort of like starting to just listen to deals. Because as Alex said, that's when you start figuring out what you like, what you don't like, the kind of founders sort of like that you like investing in, the kind of founders you want to invest in. And it starts giving you a base of what you're going to eventually invest in. Because I find that before you start, you see the first deal and you don't know whether the valuation is right, you don't know whether the terms are right. But when you see 10 other startups in the same space with similar terms, it starts giving you a sense of whether then, the first startup that you saw, then the terms were right and so forth. So you can start by mentoring, you can start by attending pitch days in different incubators, accelerators. That gives you a good sense of, how the first deal that you're going to invest in is going to look like. So yeah, let me jump on to the third one. So the third one is, and maybe a bit related to the first one, which is getting into angel deals due to FOMO, fear of missing out, right? And this happens a lot when you're a first-time angel investor. There's a pressure to get the first deal going, and you're part of a group, for instance, or a friend of yours has been making investments, and they're really pushing you to make your first deal and so forth. And so, like, you get to this point where you feel that you really want to make an investment just to sort of like get it over and done with, or at times you want to get it because you don't want to miss out indeed. And I think the advice I would have here is that I think over time you'll see that there's quite a number of And what has fascinated me truly is the amount of innovation we have in the continent. Every other time when entrepreneurs come to pitch, I get surprised by some of the problems they're looking to solve. Some of those problems, at times, I didn't even think it was a problem until they brought it up and just like, wow, that's actually a really good problem to solve and everything. So I guess one thing is there'll always be another entrepreneur who's going to come along the way looking to solve a problem, because we have so many problems in the continent and so many opportunities on top of that. And as Alex mentioned, I think first point somewhere there is that as part of the journey, you'll find out there's some deals that you will miss out on. I mean, for me, one of the deals that I remember in Kenya that I missed out on was Trigger. And Trigger has gone on to be, one of the key Kenyan startups. And I remember they came to pitch to us in the office. That's probably 2017 or something. I listened to them, and I just wasn't convinced. It just seemed, and maybe we can get to the points of why I was not convinced. But I missed out on that deal. But then I've participated in other deals, which I think have equally just been as good from that perspective. And so the idea here is just to note that you may miss out on some deals, but you shouldn't worry about that, because there's always another entrepreneur who comes and they're trying to solve, a really big problem. Alex?
Yeah, I think we've all seen huge cases of FOMO, and I think also when there's FOMO, there's a lot of peer pressure. So people often don't do proper due diligence. They cut corners because they also assume other people are doing it. I mean, I don't know how many of you have read the book Bad Blood, which is a Theranos story. And you just kind of think, who did any due diligence? You kind of just read that book and you just can't believe it. And I often think it's when FOMO comes in that people cut corners and everyone assumes everyone else is doing due diligence, and it almost becomes the blind leading the blind. No one actually is doing the checks and balances.
I know, Alex, to the point you just made, I remember there's one really experienced angel investor we had during one of the Angel Connects. And they said that for the whole of the year 2021, it's 21, I think 2021 or 2020, yeah, 2021, they did not do a single angel deal. And they mentioned that the reason for that was because they felt that the valuations were just out of this world and they were not going to participate in deals from that perspective. And 2022, they got back and they started making their own investments. And if you've been following the news in terms of what happens in 2022, most of the tech startups valuations went down significantly. And so, to the point that, deals keep coming and you just need to have your strategy, and at times just stands strong. Okay, Alex, I think you already started talking about the DD aspect.
Yeah, I mean, I think it is. I think often, especially if this is also quite tricky, because also if you're in a syndicate and you're investing a tiny amount, how much due diligence do you do? But I think you should at least check the syndicate leads due diligence and understand the roles and responsibilities if you are in a syndicate. But as I said in FOMO, I think due diligence often goes out the window with that kind of peer pressure. Stephen, and I'm sure you've seen that as well.
Yeah. And I guess for me on this, just because the good is just too good or other credible angels are on the deal. And I think what I've just learned is to remember that you could be on your deal number 1, but there's someone who's on their deal number 30 or number 20 or whatever the number is, right? And so you're looking at things very differently. They're looking to balance their portfolio. You're looking to get started, right? And so the whole idea that another angel is doing a deal, so you should participate. There are even angels who do deals because they can see how those deals are going to fit into their portfolio, because they potentially, the product that, the startup that he's working on could be useful for one of the other portfolio companies that they could introduce and so forth. So there's so many reasons to do deals. And, there's some angel deals sort of like, for instance, their strategy is different. They want to hold to maturity, for the next 10, 15 years. You probably want to exit much sooner than that. So without knowing where the other angel investor is and why they're making the investment, don't follow the angel just because they're an experienced angel investor. Just, do your DD, ask the key questions you need to ask to make yourself feel comfortable, and then you can participate in that transaction. Or at least if you're in a syndicate, at least some of that information comes to you. I'm going to jump to the next one here. And Steve Tawia, if you're in the room, I want to bring into the conversation. Steve is a key supporter of the African Angel Academy and also a very experienced angel investor across the continent. Steve, are you there? And I think probably not yet settled.
He popped in.
No,
and
I'm around.
out.
I'm around.
Oh, yes.
Sorry, I was muted. Yeah, I'm finding it a bit difficult to on the internet today, but yeah, happy to answer any questions really.
Yeah, Steve, I was just going to cue in. The next point was starting without some level of angel investor education. Steve, I don't know what your thoughts are. Do you think that angel investor education helps? Because when you started, I think you didn't have a lot of the education, but over time, I think you picked quite a number of things.
Yeah, to be honest, let me put it this way. Today, we have the benefit of having things like, African Angel Academy for educating people. But when I started, and I was actually reflecting on the beginning of the call today, when did I actually start? And it struck me that I started totally randomly in 2008. So I really was thrown in the thick of the game where I supported with 10,000 pounds back in that time, a woman entrepreneur in the catering industry. With that loan actually was a promissory note. And it had been a journey until I get my money back. That was like 2013 after. Yeah. So, angel investing, when you have the opportunity to learn and not make all the mistakes I've made, I think it's better, to be honest.
Thanks, Steve, for that. And maybe for me, from the perspective of learning, I think what I found really interesting for me is just this idea of just getting different ways of thinking about different deals. And at the Africa Angel Academy, because you're learning in a cohort, so it's not only yourself, and you're attending several Q&As on a weekly basis or a bi-weekly basis where you get to hear people asking different questions. The amount of learning you pick out of that is just immense. And so it's not so much even about the content, it's just this idea that you're in a group of people who are also trying to make angel deals, some of them more experienced than you are, and asking various questions, and we also have this idea of the pitch day that we organize, and during the pitch day, we have real startups that are looking to come in and to source for funding, and during that time, then you get to see how other angel investors will be looking at this. So for me, the different perspectives is what I find most useful, and of course, the theory by itself is also interesting. Alex?
Yeah, I think there are a couple of things. I think, first of all, I did a lot of reading, and I kind of also assume that angel investing would be very similar to VC investing, but it is different. And I think, and this is also part of the motivation around why AAA was started, but there is a lot of content available, but it's very US centric, and it doesn't really touch on the nuances of building businesses and the reality of investing across the continent. So I would say, even if you didn't do something like AAA, just by surrounding yourself with a network of other angels or joining an angel group is an amazing way of actually educating yourselves, because I think you learn so much from other people's experience and kind of case studies as well. So I think, Sibalela says here, is there a minimum amount recommended when making the first investment in a personal capacity? And I think part of that answer is also not to invest alone, which Stephen, I don't know if you're going to cover, but for me, that's really important. So just to answer the question in the chat, I don't think there's any minimum amount. You obviously want to participate in a round that's meaningful for the startup, so that they can, you don't want to give someone $1,000, dollars, and that's the full round, because it's kind of meaningless. They're just going to go out and carry on raising money. But I think a couple of key points: you have to be prepared to kiss that money goodbye. You've got to, as a coach of mine said to me, you have to bless and release it, especially on your first deal, and you have to be okay with that. And then the other thing is, don't invest, be part of a group, so you can also you don't take all the risk. So
yeah. So thanks, Alex. And I see there's another question of, and it's not a question, it's a comment where Serena says that they're just in a deal where they claimed the startup claimed a $6.5 million letter of interest from a customer, but they wouldn't show the letter in the deal room. What's your opinion? Yeah, I mean, if you're already in the deal room, meaning that you've already signed an NDA, most probably, because I know there's some things that the startup would keep, and they would say you have to sign an NDA before they can be able to share that information. I would find that very suspicious. I would find that very suspicious because, you know, that's an element of their traction. And, you know, as a startup, if you trust the angel investor, they've signed an NDA, you should be willing to show that element of your traction, because it goes to supporting, you know, the terms of the transaction, whether it's evaluation, whether it's safe that you're using in this case. So I would find that very, very suspicious in this case, and I probably wouldn't participate in the transaction if they would not be willing to reveal that at some point. Then we move on to the next point here. And I think, Alex, you're just talking about is going it alone, which is one extreme, and the other extreme is going with the wrong partners. And I think maybe let me talk about the going with the wrong partners here, because you see, when you're investing in a group, you'll usually end up in a syndicate structure where there's a couple of you who are making an investment, and there's different ways of you to do this. You probably could incorporate a company or you know, limited liability partnership, whatever entity you guys put together, and you'd be part of that entity. You'd pull your money into that entity, and that entity would be the one that's making the investment. And I think the challenge of having the wrong partners, and wrong partners could mean many things here. It could mean that you don't have the same investment horizon, right? People come in, they want to get out of the transaction within a very short amount of time, but yet the you know, typical angel deals, before you can exit, you're probably thinking about 5 to 7 years. It could be different, but you know, that's the kind of range you're looking at. It could be that some of the people you have, you know, do not appreciate the kind of risk they're getting into. And maybe the startup goes through a down round where the valuation you entered in was this figure, the valuation comes down, and they get very jittery and they want to pull out in this case. And it really destabilizes the group in this case, especially if the other syndicate members are not willing to take over the risk or to take over the shares of the other sort of like syndicate members. And it could also just be from an ethical perspective, right? There's many things. And so the advice here is that when you're looking to go into syndicate, is to spend a bit of time understanding the people that you want to get into the syndicate with. And most angel networks that you find, they'll spend a lot of time sort of like understanding who are the members who are in the angel network. They'll do some level of KYC just to sort of like determine, you know, where the angels are coming from, the kind of funds that they're putting their cash into. But the most important thing is just to know the people, to network with them, to make sure you understand them, so that as you get into transactions, you have the same sort of like frame to look at the transaction from and to sort of like manage the journey in this case. I think, Alex, you already spoke about going it alone. Do you want to add any other point here? Should I move to the next point here?
Yeah, the first angel investment I did, it was with the completely wrong partners. They try to get very operationally involved in the business. They didn't understand the risks. It was just a disaster. So I think also wrong partners again. So like ethics again, and also, you know, I would ask some questions around what happens when things go bad. So I think that's often when you see people's true colors around, you know, how you treat the founders, or maybe even just having a discussion. What does founder friendly mean to you as an angel investor? If that's important, again, and then also just I think wrong partners as well, but maybe it's also a little bit of a blind spot is you want to also invest in partners who've got maybe complementary skill sets to you, and not everyone has the same skill set, because I think that's been really useful. So, you know, maybe having someone in the syndicate who's got a strong legal background, or, you know, so that you can draw on each other's strengths. I think that's also something in terms of partners which I would look at.
Thank you, Alex, for that. Let me move to the next one. I see we have only 15 minutes remaining, so we're just gonna keep the comments a bit short now so that we keep time. Let me move to the next one. And the next one is pushing startups for terms that are completely out of the market. And I'll take these, and then Steve, I'm going to invite you for the next ones, the next point. And I think for these, what I've seen is angels will sort of like start out, and because they've not spent time to understand sort of like how startup financing works in terms of that there's multiple levels of financing. You start, at the angel level. There's probably a seed stage. There's probably Series A, Series B, Series C, etc. And of course, there's also bridge rounds that happen in between all those. They come in and first round, they want to get a 50% stake, for argument's sake, which, if you're an angel investor, you know that you cannot ask for 50% stake in the first funding round, even the second, even the third, even the fourth funding round, unless things are really dicey in the startups, but even then. And what this then does two things. Number one, startups talk to each other because it's an ecosystem. And so you could get a situation where startups then go and say, this angel investor, they don't understand, or they're very aggressive in terms of the terms. So guys, don't talk to them, or be very careful when you're dealing with them. And you don't want to have that as an angel investor, because your biggest asset as an angel investor, as far as I'm concerned, is your reputation. Because if you have a good reputation that you add value to startups, that the best startups come to you, etc., the good deals will always follow you. And once the good deals follow you, then you have the chance to participate in the best deals in the ecosystem. So that's one thing, just from the startups perspective. But also from a deal perspective, if you get into a deal and the deal is not structured well in the first round, then what tends to happen is that the subsequent investments become much more difficult to do. So for instance, people come in, they find that you already have 50% in the startup, and they understand how sort of like the game is played, if you're to say that. The challenge they face with you is that then they cannot invest if they feel that the founders are going to get over diluted. And so they'll always push you then to restructure those terms, and that at times slows things down, or at times the startup is not able to raise funding. So it's not good to push startups for terms which are not in the market. So I'll jump to the next one. And Steve Tawia, if you're there, not supporting the startup once the investment has been done.
That one is a bit of a tough one. Can you see me? Yeah. No, I mean, this is one of the things that a lot of the angels may struggle to do, because sometimes you would invest in something you don't know. So one of the key recommendations I always say is, at least for those who are starting, invest even small amount in things that you feel you understand, and then where you feel can provide a bit of value. So that's the critical one. The supporting entrepreneur beyond capital at Angel is kind of the way that you give back to your society and give back to the ecosystem. So when you're starting to do your angel investing, I really strongly recommend to invest in something that you kind of understand well and where you feel can provide value. The worst thing is when you're starting to invest in something that you feel is hype, you have to invest in, and people are putting money in, but they actually don't get it. Like a crypto startup that using blockchain to do some Web3 thing with AI and machine learning with digital identity. I don't know if a startup like this exists, but it may sound all the buzzwords and AI, machine learning, ChatGPT, whatever, but actually you don't understand much and you put money in, and that's not a good idea. To be honest with you, even my first investment I mentioned earlier, I did not have a clue about retail at all. But I can tell you, I learned the hard way, where I had to go through a lot of the challenges with the entrepreneur. And that also one of the triggers that made me do a lot of courses in different areas where you get to learn. And the more you speak with entrepreneurs, the more you learn about various industries and sectors that give you a bit more insights. I mean, I can mention a lot more things, but I don't want to pick up all the time here. But
no,
yeah.
Thanks, Steve. Really appreciate and really good points. I'm not going to add anything to what you just mentioned. Alex, you're up next. Taking too much time to say no.
again, I think that's that kind of comes right back to the first one. You know, often not having a clear strategy. I think it's also quite hard if you're in an angel group as well, and people have, as a group or also as a syndicate, if you have different people with different opinions and you try and keep everyone happy and different ideas of what the mandate is. But I think it is really important to be able to say no quickly, and also kind of you know, also if red flags pop up as well, being quite clear about them and know what your red flags are, and so even if something is in your mandate, not kind of waiting for those red flags to kind of magically turn into green flags, but actually just say thanks, but no thanks.
Thank you, Alex. Then I'm going to take this one, and estimating the risk that goes with startup investing. So, I mean, we speak a lot about this in the program, but angel investing is risky. You're investing in companies that, you know, are trying to solve complex problems, and, you know, there are times they're using business models that have not been formulated before. And, you know, the statistics are there in terms of how many startups make it by the 7th year. I think it's something like maybe 10% or less than that make it by the 7th year, and the number keeps reducing as you move into the future. And so the recommendation then for you as a starting angel investor is do not invest anything more than, let's say, 10 to 15% of your total net worth, excluding the real estate that you live in. You know, that's a general recommendation. Of course, you can tweak it here and there, but based on theory, because it's an asset class that is risky. Of course, there's things you can do there in terms of minimizing that risk by sort of like investing in a portfolio of companies, portfolio meaning different sectors, meaning different stages. You know, investing sort of like small amounts in multiple deals as opposed to take all your money and invest in one transaction in this case. But it's a risky spot, and that's why, you know, number one, get some proper education before you get into it. You know, work with people who, you know, been doing this for some time, so that you can sort of like get some level of guidance and so forth. And that helps a lot to be able to minimize risk, but it is a risky asset class. So I'm going to move to the next one here, and these are just bonus points. The first here is related to the point I was just making, stopping at one deal. And really the challenge of stopping at one deal is that you don't build a portfolio. And assuming that we just mentioned that, you know, probably 10% are the ones that make it past the 7th year, no one has no one can tell the future, right? Nobody knows which one that is going to be. And even if we imagine that one is the one that's going to really make it, and maybe all your eggs don't get spoiled, but some of them are really the ones that are the best in terms of giving the most return. No one knows what that one deal is. And so then the idea of thinking about a portfolio is such a critical one as you're sort of like getting started from your angel perspective. And then the last one for you, Alex, putting all your cash or most of your cash in one deal, since it's a sure bet.
Yeah, I think, again, just like you would invest in, you know, you want a balanced portfolio in stock exchange, or like in many things in life, you want to hedge your bets. And I would strongly suggest that you rather go smaller and you have a more diversified portfolio than putting all your cash in one deal. That's my view. I'm sure others might have similar things. Stephen,
no, Alex.
we have some comments. Yeah, but we have. I'm pleased you jumped onto any questions, because we've got a few in the chat. Katie's just saying how due diligence on members of your angel investing group is really important, and also, you know, it's the simple things like, have they got all their tax affairs in order, those things. And then Fabrice, I don't know if you want to clarify. You say, I'm facing the opposite challenge where angels struggle to understand that the network can provide more than capital. I don't know if is it the angels or startups?
Oh, the startups. Sorry, what did I say? Angels? Sorry.
Angels. Okay, so it's the startups.
Yeah, the founders. Basically, they're happy to take our money, And when they face difficulties, even though we told them at the beginning that, you know what, don't hide things from us. If you have problems, come to us, because most probably somebody in the network has lived exactly the same situation. And they don't come to us because they are afraid of our reaction. And they tend to hide things and do things their own way, even though we could have saved them a lot of mistakes.
I think that's true for two types of businesses. So the first one I would say is, did some of those businesses show you red flags that they were uncoachable when you were looking at them right from the beginning? Because that for me is a big sign. And then I think the other thing as well is maybe it's also because, you know, there are a lot of investors who say they will add value and they say they will do a whole lot of things, but actually they don't. So maybe it's also just around, you know, being able to have very clear examples of and demonstration of how you can add value beyond just capital. I don't know if that would help solve your problem.
Yeah, maybe I'll try.
It's so tricky. But for instance, you know, I'm looking at a startup right now. I've met them once. I met them last week. And yes, the one person's working full time, but they've been having issues with IP. And I introduced them to a top IP attorney who's a specialist in their field in Cape Town. And this person replied back, giving them a free consultation. And as a startup who's got intellectual property, you know, you don't, and they haven't emailed her back. And I'm like, you guys are I was like, you're uninvestable. I'm like, you know, so I'm just kind of, you know, it's just sometimes little things like that. And then Nigel has asked, which technology or software tools do you use or would you recommend for managing an angel network? And I just wanted you to quickly mention the one you use for BBAN.
Yeah, we use something called DLAM. I'm gonna just type it here. Before that, we were using Gust, I think Gust. And I think, you know, there's so many of these. If you Google, I'm sure you'll get a number of them. I think the reason why we went with DLAM for angel networks because we found it very easy to work with. So like to move angel deals between one stage to the next stage to the next stage, for angels to be able to vote on deals before we get to the IC, so that we can see what's the level of interest that angels have, and then we can sort of like move to the next stage. Gust also has similar functionalities, but we found it was much more difficult, so like to work with. It was clunky. I don't know how to put it, but those are some that you can use. Of course, there's Airtable and Google Drive and WhatsApp groups also. Those also work quite well. And Alex, I think we need to finish. We have only 2 minutes, and I'm seeing these questions. Max, I don't have a physical office in Joburg, but when I'm in South Africa, I go to the
Cape Town office.
I have a Cape Town office and the Meridian office with Alex. So yeah, that's. But I'm based in Nairobi. I'm based out of Nairobi in Kenya. Okay, so I think we need to move to the Q&A around the program itself and the call that we have. So if you'd like to solve a number of those problems we just mentioned, or at least have a viewpoint in terms of how to address some of those challenges there, you definitely should attend you know, the upcoming program which we are having, and you know, we are inviting angels to apply from different countries. I think we have Kenya and Nigeria. We have sorry, Alex, which country am I missing? I feel like I'm missing
The most important country of all, South Africa, of course.
South Africa, yeah.
And also,
and I guess you also have some angels from the diaspora.
Yeah, so we also, because this program is funded by the UK International Tech Hub Network, we are specifically focusing on those 3 countries in Africa, so Nigeria, Kenya, South Africa, and then we also are working with diaspora based in the UK or UK nationals who wanting to invest in Africa. But we are also going to have a program later this year, thanks to the Dutch Good Growth Fund. So Julia is here on the is on the call. So Rodrigue, Musechu, Tanzania, yes, we're looking very much at Tanzania, and Suzanne, Ghana, we're also working to see if we can do another Ghanaian program. So we definitely will look at bringing on more countries in the second half of this year. So also please kind of watch this space. Ayanda, over to you.
Okay, perfect. Thank you very much, everyone. We will be circulating the recording. Yeah, we know load shedding. I'm currently load shedding myself in South Africa. But I did notice also a few messages back and forth where there was a difficulty with the link or some confusion. So we'll be circulating this, but applications are open. So like I said, if there's anyone that you're thinking about, if there's anyone specifically that you know within your network or you yourself are thinking, okay, I'm a little bit clearer about what this is about and I would like to get started, please complete your application sooner rather than later. We only do have 20 partially sponsored places where you pay the steel price of £200. That's about $245. If my mental arithmetic serves me properly. But yeah, we will be circulating this presentation, and then we will also just be sharing this recording so that you can share this within your networks as well. So if you're within your own angel networks, and a few people still need some convincing and a few people still need some clarity and they missed this call, you'll definitely from tomorrow be able to circulate this on YouTube. And a new feature that we're trying out that Alex and Stephen are so excited about is that you can actually leave questions and further comments on our YouTube for them to answer relating to this topic, just so that we can keep the conversation going. But yeah, there's lots of knowledge to be shared, and I think lots to be demystified about getting started with angel investing to make it less intimidating. But also, we definitely do want more African capital for more African founders. So this is how we're going to do it. We're going to get more people in angel investing. Applications close on the 17th of February, so please get your applications in sooner rather than later. And yeah, that's it from my side. Thank you very much, everyone.
If anyone wants to stay on and answer a few questions or ask us